Hello traders and welcome back to the Forex Geek. Today we're going to explore the bullish pin bar candlestick pattern, which is a powerful tool that can signal potential reversals in the market. So understanding this pattern can enhance your trading strategy and help you make more informed decisions. So in this video you will learn how to identify the key characteristics of a bullish pin bar, the best locations to trade it, and effective entry strategy. So stay tuned until the end as we will also discuss common mistakes to avoid to improve your trading success. So without wasting your time, let's get started. So first, let's identify the key characteristics of this pattern. To effectively identify a bullish pin bar, it's essential to understand its key characteristics. So this pattern has a specific structure that sets it apart from other candlestick formations. So here are the main features to look for. First, you should look for a small body. The body of the candle has to be small, no matter the color, be it a bullish candle or bearish candle. So the body of the pin bar should be small and located near the top of the candle, and this indicates that the price opened and closed close to each other, reflecting indecision in the market. So the next characteristics is a long wick, a long lower wick actually, and this is a defining feature of the bullish pin bar. So it should be at least 2/3 of the total length of the candle. So this long wick shows that sellers pushed the price down significantly before buyers stepped in and drove it back up. As you can see, we opened, sellers pushed it down up to that lower wick, the low of the candle, but buyers stepped in and pushed it up to close very close to the open of that candle. So the third characteristic is short or no upper wick. It could be short or no upper wick at all. So that is another characteristics, and ideally there should be little to no upper wick. So this indicates that buyers were strong enough to push the price up without much resistance from sellers. So the last characteristics is a close near the high, and finally the candle should close near its high. This reinforces that the strength of buyers in overcoming selling pressure during that trading period. So let's talk about how to use this, how to spot it on the chart. Let's hop on real chart. This is USD card on the daily time frame, and we are on the trading view platform. So you can see this green candle right there. That is a pin bar. That's a bullish pin bar candlestick pattern, and the one in the middle, this green candle right there. And let me look for another one. Remember, there should be a longer lower wick, a small body, and little to no upper wick. And this is another one right here. And this red candle right here is another bullish pin bar candlestick. Remember, this is exactly how it looks, and you can see it here. This candle right there. So when trading the bullish pin bar, identifying high probability setups is crucial for maximizing your success. So here are some key strategies to consider when looking for high probability trading setups. The first is support levels. So you should look for bullish pin bars that form at significant support levels, and these levels indicate where buyers are likely to enter the market, providing a strong foundation for a potential reversal. You can see this is a trend line, and this trend line can be used as support. And you can see this series. We had two bullish pin bar candlestick patterns here. You have this one, the bullish candle, and I have this bearish candle here. Both are bullish pin bar candlestick patterns. This is another one, but it's more likely dodgy, but it can still fit into. You have the small body, the little to no upper wick, and the longer lower wick. So series of bullish pin bar candlestick pattern right there. So it was wise to trade from support levels. So it was a wise decision to look for bullish pin bar candlesticks and also look to enter trades from there with a stop loss just below the pin bar, the bullish pin bar, the low, and take profits could be at 1:1, 1:2, or 1:3, or you could target specific highs, which in this case didn't actually work exactly, except if your stop loss is quite lower, you give your stop loss enough room to breathe, as the trend is generally bullish also. So another one is to look for the bullish pin bar candlestick pattern at Fibonacci retracement levels. So the bullish pin bar pattern is particularly effective when it appears near Fibonacci retracement levels, like especially the 50% and the 61.8%, and also the 71. Let me just add this Fibonacci. Also the 78.6%. You can see the bullish pin bar forming at this 61.8% level right here around this area. So that is a very good level to look for potential buying opportunities. So another one is trend line bounces, and we've already talked about this one. You can see this trend line. We have this trend line here. So we're expecting the bullish pin bar to form at the trend line, and this can signal a strong buying opportunity. So the trend line acts as dynamic support, and when the price bounces off it with the bullish pin bar, it indicates renewed buying interest. So another one is confluence with other patterns. Combining the bullish pin bar with the other technical patterns such as the inside bars or double pin bars can increase the probability of a successful trade. So these combinations provide additional confirmation of the market sentiment. So you can see we have this bullish pin bar here, and after it we have the bullish engulfing also. You can see this the bearish candle, and you see the bullish candle totally engulfing the bearish candle, forming the bullish engulfing, and this gives us enough confirmation to look for buying opportunities or enter a buy trade from here. You also have this bullish doji star here. This is a doji candle right here. So all these are additional confluences and chart patterns which you can add to your trades to ensure that it is a valid one. So common mistakes to avoid is when trading the bullish pin bar, you should be aware of common mistakes that you should avoid, and here are key pitfalls to avoid. The first one is assuming reversals from a single pin bar. So when you see a pin bar, you shouldn't just be assuming reversals. One of the biggest mistakes traders make is believing that a bullish pin bar will automatically lead to a market reversal. It's important to understand that while this pattern indicates potential buying pressure, it does not guarantee a reversal, especially if it appears against the prevailing trend. So always consider the overall market context before acting on a single candlestick signal. For example, you see this, we have this bullish pin bar right there, and you can see that price has already started giving us this push to the upside with this break of structure, and this bullish pin bar was just a retest of this. It was just a breakout and retest. So this bullish pin bar was the retest of this resistance level, which turned support, and we had that push to the upside. Price also came to retest that same level again in the future. And let me look for another example. This is another one. You can see this bullish pin bar candlestick pattern there. So this formed at the key support level. So you shouldn't just assume that this single pin bar should be giving you a buying trade or buy opportunity. Always trade it in context. Trade it with context with the overall trend or the overall market context. So another one is overlooking confirmation signals. So entering trades solely based on the appearance of a bullish pin bar can lead to premature entries. So it's essential to wait for confirmation from subsequent price actions, such as the next candle closing above the pin bar high, and this additional confirmation helps validate the bullish sentiment before committing capital. So the next is poor risk management. So many traders fail to implement effective risk management strategies when trading pin bars. So always set appropriate stop losses and position sizes relative to your account balance. Always set your stop losses below the pin bar, or in this case we could just place it below the overall support level, and then take profit could be at this swing high or that resistance level. Price later got to that level, as you can see. So that was how we were able to, you can see we had several confirmations and continuations for price to get to that level. So this is another one. So always trade in context or in line with the trend. As you can see, we had price come to take us out even after giving us this pin bar. So traders who entered from there would have taken a loss, as price still went on to give us this push and use this traders here as liquidity, or hit their stop losses. So it's always important you trade in line with the trend. You can see this is the major support. You see price bouncing off here and here, and also it's expected price should get to this same place, and price hadn't initially hit that level. So we had this pin bar, bullish pin bar, giving us this push like it was going to actually start reversing, but it didn't, and we had this actual touch of that support before price started giving us the reversal to the upside. So that's just how you can use the bullish pin bar candlestick pattern to trade. So always set appropriate stop losses and position sizes. We've already talked about that. Alright traders, we've come to the end of today's video. Today we explored the bullish pin bar candlestick pattern and its key characteristics, high probability trading setups, and effective entry strategies. So we also covered common mistakes to avoid. So by understanding and applying this powerful pattern, you can enhance your trading skills and make more informed trading decisions in the market. So if you found this video helpful, please give it a like, subscribe to the channel, and turn on the notification bell so you never miss out on any of our updates. Until next time traders, happy trading.